So today I'm going to take you through my M1 purchases that I'm going to be making on my account so you guys can see some of the trades that are going on. Now, if this is kind of something interesting for you, let me know in the comments down below. I might do some more of these in the future. So we'll jump on my portfolio right over here so you guys can take a look. And as of right now, we are looking at the closing of June 4th, and we are sitting at $5,768, which is fantastic. We had a really good end to the day. We were up 2.83%. And then if we go to the week, we were actually up 7.32%. So pretty good week overall across the board. And then if I go over here to the month, we can see that our month we're up 15.93%. Let's go to the quarter here, and we're up 25.42%. Now, just really quick too, in case somebody's not familiar with M1 Finance, this is money weighted return. I know some people don't like it, and that's okay. Totally understandable. I personally love this kind of metric because it really understands for me that this is how much I've made in the last quarter with all of my money in my account. Now, in the last year, overall, we have a 75.8% return at $880. And then I think my all-time is just a little bit higher at 109.68% at $885.89. A lot of that had to do with the fact that I wasn't investing a lot at the beginning. As you can see here, it was very small amounts I was investing, and then I just really started going through, which is important to note when it comes to investing. Now, for those that are curious, as far as my actual gains currently for the stocks that I'm actually holding, I am up 13.38%, which is $680.91. Effectively, if I sold everything tomorrow at the exact price that they're at, that's how much money I would have had made in profit, because that is my cost basis, which is $5,087. But my actual value on the portfolio. So two different ways to look at it. Again, there's different things. This just means right over here that I actually sold some stocks for profit, and that profit is still showing here, which again, I like to have seen in that regard. Now also too, if you are curious about this software, this is M1 Finance. This is what I mainly use for creating my dividend income. I'll have a link to them in the show notes down below. You can definitely check them out. I'll also have some video reviews here on the channel if you want to go some more in depth as far as some pros and cons with this platform. Now, like I said, we're going to show you what I'm going to be investing in for this upcoming week. I usually do my main purchase on Mondays. I already have my money in my cash balance right over here for Monday, but even if I did it on Saturday night, Sunday night, even if it shows a zero balance, but I have the deposit going through, M1 gets that money into the account that next morning, even if it hasn't pulled from my actual bank right away. So I really like that. So what we're going to do is we're going to go into my upcoming trades. Now, normally M1 Finance just automatically invests everything based off of my actual and my targets. But there was some weird stuff going on, so I had to, as you can see these little dots over here, I had to manually do all the investing for it. Maybe it was a glitch or something like that, but not too big of a stress. But just as a quick example, the way M1 Finance will normally just kind of take the reins for you when making deposits is it will look at your actual percentage, which is the top piece here, and then it will go against your target, so where you want this actual fund to be. So as an example for me here, my actual goal is, my target goal is 21%, but my actual is at 20.1, which means that M1 Finance is going to want to put more money into this tech pie over here versus my financial pie down here, because my financial pie goal is to have a target of 15%, but it is well over at 16.8%. So less or no money is going to go into the financial pie if I let M1 Finance normally do its own thing. So just kind of a quick example there for somebody who's maybe using this platform and kind of wanting to get a better understanding for that. So we're going to go here into view details, and this right here is going to show us our upcoming trades. So I actually went ahead and purchased into actual sectors overall, which you can do if you wanted to buy into manually into sectors. You could even go as far as buying into individual funds as well. So I chose to have, out of the $200.31 in my account, I'm going to have $13.49 go into real estate. I'm going to have into my financials $25 going into there. I'm going to be going ahead and putting about $80 into my tech pie. I'm going to do $10 into my industries, $12 into my health. I'm going to do $15 into my Vanguard ETF right there. Another $15 into real estate, and then $30 into consumer products. So the way that's going to break down is in those sectors, I'm going to go ahead and have that money just really disperse itself based off of those percentages. So you can see here in my estimated trade, out of the 31 stocks I currently have, pretty much 21 of them are going to be getting something, and then 10 of them are not going to get any. That can change a little bit just based off of prices and when they actually end up buying into those stocks, because it's not always instantaneously in the morning. So AT&T right over here, looks like they're going to get a bulk of the trade, which is $23.98. Pretty happy about that, mainly because they are still having a really good yield right now with their current price. Again, I could adjust these if I really wanted to as well. Microsoft is going to get $20.76. We're going to have Apple getting $17.79. And then Verizon, out of the last in my tech pie, is going to get $16.62. And I am aware that technically for most people, Verizon and AT&T are not going to be in their tech pies. I just have them in there because I don't really want them in a consumer pie. Just my own personal preference. And then we're going to have, right after that, we're going to have Pepsi getting $16.22. Vanguard's getting the exact 15. Digital Realty Trust is getting the full $13.49 for my real estate pie. And then after that, we got Aflac getting $12.29 for the financial sector. Johnson & Johnson is going to get $8.65. And then we got Procter & Gamble at $7.37. We got Verizon going to get $6.92. Target will be getting $5.83. And then back into the actual financial sector here, MasterCard is going to get $5.78. And then continuing on here, Home Depot, $5.37. Kraft Heinz, $5.19. And then Lockheed Martin's going to get $3.55. And then over here, we're going to have Costco at $3.36. AbbVie at $3.34. 3M at $3.34 as well. And then CMI at $3.10. And then the very last one here at the very bottom is Hasbro, and they are getting $1.20. Now, depending on how this all ends up, there are two excluded for M1 Finance because they do need at least over $1. So if something goes down in value in the morning before the trade actually happens, there's a chance that one of these or both of these can get that extra amount to be able to get invested into. So it's not a clear idea of whether it's going to happen or not. There is a chance for that. But I just kind of wanted to show you my overall trade for the day so you guys can see some of the different things that are going to be going on in my portfolio, so you can have a good understanding of some of the things I'm going to be having my money go into that I already have invested. So those are all stocks that are already in the portfolio. There's nothing new being added to them. The percentages are actually all staying the same. I haven't changed anything in a couple of days, which is somewhat rare for me because I go in there and mess with my percentages quite often. But I think it's really important to show people that still be investing regardless of how the market's doing, whether it's doing great or maybe it's doing poorly, depending on your preference, right? I know some people kind of got a little sad that the market has recovered so quickly because they wanted to keep on investing. And then some people are really worried that there might be another drop in the market, so they might be holding back. My biggest thing with it is if there is going to be another correction or another downturn in the market, that still investing even right now is a good idea, but maybe slowing down a little bit if you can, if needed to. But if you don't feel like that's going to happen, I would still definitely consistently be investing, whether it's a weekly, monthly, or however often you are able to invest. Because one of the biggest things, if I go back here and show you, like I talked about, so I started investing in January. I think it was the 23rd of January. It was $100 in the account. And then you could see here, it was barely going up every single month because I was just playing around with it, kind of getting some ideas. And then around April, May, I started really investing a little bit more, where I was putting about $10 every single week into the portfolio, and I started growing it, getting more comfortable with the idea of what I was investing in as a total, and adding more companies and getting more involved with it. But what was happening was I was being consistent, and I was understanding that I had to keep putting money in even if the market was doing very well, just because I think if you are trying to time the market, you tend to potentially lose in the market. Now, maybe there's some people out there that are doing very well, but I think for a majority of people, it's all about making sure that you're consistent. So you could see here all the way up until January 20, I'm trying to get to 23rd of 2020. So in a year's time, I went from pretty much putting in my first 100 to having $1,364.48. So what that did for me was it gave me a lot of confidence and understanding of what I'm trying to accomplish, because I've invested before, but this one is going to be for definitely a lot more long-term and for dividend income. And so for me, I wanted to have that consistency and that flow and showing people that you can invest and get started with a very small dollar amount and still have some pretty big impact. And then what happened, of course, was in early February, the market started going down. And so then that gave me a lot of great opportunity to be buying in at a much lower cost. But because I started having all this, practice and getting some ideas of what I wanted for my portfolio, that when the market did start going down, you're going to start seeing here that the money starts jumping pretty substantially across the board. So again, it was like 1,300 at the beginning, but right here already in March, we're already seeing a couple extra $100. By mid-March, it looks like right here, I think I hit over 2,000, and then I believe right here, yeah. So in April, I doubled the amount of money that I had in a whole year. I did pretty much double that in just a couple of months. And then because of the way the market was recovering and then the confidence that I was having with putting this money in, you can see here that I kept putting more and more in, getting more comfortable. The market was still at a good spot for me to be investing in. And now we're sitting going up and up and up right over here. Now, of course, we're at today's date where I'm sitting at over $5,768. But again, that a lot of that stemmed from this idea that I want to keep on investing, keep on understanding and going forward. And now that the market has kind of recovered to some degree, I don't know if it's going to go down again. I don't know if it's going to go up. That's not what this channel is about. By the way, I don't try to predict anything. But what I do try to have an understanding for and help other people is that whether the market is good or bad, I'm still going to be investing in it. And maybe if it's doing really, really well and it seems a little crazy at some degree, maybe I'll start investing a little less, but definitely still on investing as a whole. And then if something were to happen where the market goes down, I have some extra cash set aside to be able to invest in. So if you ever hear other people talking about being cash heavy, that's essentially what it is that they see an opportunity that maybe the market's going to go down and they would rather have this money to be able to invest in large quantities. But that doesn't mean that they stop investing now. They mean just maybe I'm going to hold back a little bit more than what I was traditionally investing with. So for me, like I said, I started putting in a lot more money once the market started going down. At this point, I might kind of scale back a little bit on how much I'm putting in the market on a weekly basis, but that again doesn't mean I'm going to stop entirely. And then if something happens again where the market drops 10, 20, 30%, I'll be ready to be able to start throwing a lot more back into it. So that way I have more opportunity for growth, dollar cost averaging, which you might hear quite often, which is essentially just doubling in on the companies you have, even if the market goes down and the value of those stocks have gone down too. Now, I want you to keep on learning and growing with dividend investing. So I want you to check out my video right over here to help you continue on your education when it comes to dividend investing. Thank you so much for watching, and I'll see you in that next video.